Hello, and welcome to the 12th episode of the Market Pulse series. My name is Rufas Kamau, Markets Analyst at FX Pesa. So today, we are going to cover one of the most interesting things, especially at the beginning of the year, and this is the planning stage. So we'll be focusing on how to develop an investment plan, how to get it going, and how to keep focusing and improving your investment plan. So my message to you guys at the beginning of the year, remember this is the first week of trading for the year. We still have 51 more weeks after this. So as we move forward, before you execute your very first trade, maybe I'm too late with this message, make sure that you have a goal in mind. Make sure that you know what you are looking to achieve. Set that goal as a number. Write it down. If you're looking to make $10,000, write that down. If your goal is $100,000, write that down. If it's $1 million at the end of the year, then write that down. So once you have that written down, then give it a time frame. Of course, you can say it's up to the end of the year, maybe for 2 years. Be a 5-year plan, 1-year plan, doesn't matter. Make sure you have a time frame. Then once you get this done, then focus on the amount that you're going to invest. So most of the people, including myself, don't have a big lump sum that you can start investing right away. Don't have $1 million that you can just put to work right now, start trading, and then get to $10 million. So most of us, we kind of grow organically. So we save some amount here and there in our lives. You saved $100 this month, maybe $200 next month, and so on. So you need to have a plan of how much you are looking to invest towards the end of the year. So you might start with a small amount, but if you keep building that investment, then by the end of the year, the amount that you have invested could be a significant amount, enough to give you sufficient rewards that are according to your target. So besides having a target, have a specified amount that you are looking to build or invest in your portfolio. So let's say you want to invest in the financial markets, let's say Forex trading, stock market, crypto, whatever that is. Let's say you want to invest 1 million shillings. So you might not have the million today, but if you commit, let's say to do 50,000 per month, could be 70, could be 100,000, and you keep doing this consistently, then by December, you are more than guaranteed that you have made an investment worth 1 million shillings. So besides these, then we'll be also focusing on the expected returns, how you navigate through that, and at the end of the session, you're supposed to have at least an idea of having an investment plan, how to build one, and how to be successful at it. So that being mentioned, let's check if you guys have joined. I see Willie Bet has already joined. Thank you for taking your time to join this particular session. So once you join, make sure that you say hi on the live comment section. Just say hi to everyone. Happy New Year. And let's get to learn and grow together. So before I make any progress, I know some of the attendees are people already trading, you've been participating in the markets. So I want to show you a very quick technique here. This is not a recommendation to trade, it's not financial advice. So I'm just giving you some educational content here to help you along the way. So the chart you're looking at here is UK oil. It's trading on the 1 hour chart. Remember, today is the 3rd day of trading since the markets opened on Tuesday. So remember, Monday was a public holiday since the 1st of January was on a Sunday. So the holiday was moved to a Monday. So Monday, the markets were not open. So markets literally opened on Tuesday, through Wednesday, and then today being Thursday. So as you can see, oil opened here, went a little bit high before dropping all the way down. And then from here, kept going down yesterday. Today attempted to go up before pushing back down. So yesterday's bottom marked a very strong support here. And this was a price level of around $77.765. So for a lot of traders who are selling on day 1 and day 2, they enjoyed some good profits. And if they decided to sell, buy back, then the probably bought at 77.765. So this is why you are seeing the reversal in price here. So at the same time, for the buyers, they were waiting for prices to get low and identify a nice entry point. So when prices started changing direction, the buyers were buying. So as you can see, the price action today has been moving upwards. However, what happened here in the late trading, especially the open of the New York session, price crashed all the way down. Remember, the guys who had made very early entries here went for a buy trade. So they probably set their stop loss just below this tail here. So price goes down, grabs that liquidity, basically triggers all these stop losses. Then triggering the stop losses basically means buying back. Then buyers come in and drive the prices back higher. So the moment I saw this particular candlestick, the pin bar, it was a signal enough to show that the liquidity has been grabbed from here. Buyers are entering strongly in this market. So it was an idea to go for a buy position at this price level. Set a stop loss just below the tail and then target even higher price. The risk level here, you're probably looking at risking about 800 points. Then the reward is about 3,483. And this is roughly about 8 times the risk you are taking. So that's one of the ways that you look for such positions. If they appear, and when they appear, you might be able to ride a very strong swing, especially once the liquidity has been grabbed from such a trading setup. So there's a good chance we'll be seeing oil starting to recover from this sell-off that we saw in the past 2 days of trading. So if in actual sense, there's that recovery and price keeps going up, then the trade will play out. If it doesn't play out, then the market might pull back. However, if the candlestick was to move a little bit higher and close maybe to our today's high, then it may make sense to move the stop loss from here and push it towards the entry point so that we have a free trade that doesn't risk our capital. So that's one of the ways to consider approaching the markets, especially when you have such volatile markets. So these retests that normally wipe out the stop losses in the previous setup tend to be very good entries. So I've been doing this for quite a number of years. It has been playing out well. So if you master this pattern, then there's a way you can get to benefit from this every time it happens. Now, where were we? We were looking at something that is very important, and that is having an investment plan, how to develop one for the new year, how to set an investment goal, and also how to follow through the plan. So we have covered a lot of topics along the way. So if you go through the Market Pulse series, remember today is the 12th episode. So you're going to cover more, see more content where we cover more ground surrounding trading. So we have gone through the psychology of trading. We have covered risk management, trade setups, all the tools that you need in trading. So in each and every episode of the way, or shorten your journey from a beginner to a pro level trader. So if you're a complete beginner, you have never traded before, you should know that we have a novice to pro series. So I'll be sharing that link on the comment section, such that if you want to start trading, then you just go through the novice to pro series and then advance from there. So far, over 8,000 people have already gone through the first episode of the novice to pro series. So hopefully, it gets to build value and get you moving in the right direction. So I'm just trying to get that link so that I can share with any beginner who is watching this series right now. So for the first episode. Got it. So sharing in a moment. Yes, there goes the link in the live comment section. So hello, Charles. Welcome to the session. Hello, Salva. Hello, Boaz. And Happy New Year. Hello, Ryan. Thank you. Welcome to the session. Hello, Pauline Achayo. Do you have a webinar on Fibonacci? No, I have not done a webinar on Fibonacci, but I know someone who has done that. So go through the FX Pesa channel and then look for the start for this series. Sorry for that. So go through the, it should be under securing the bag. So there's a particular series on FX Pesa channel called Securing the Bag. So in this particular series, we cover different topics. It's mainly hosted by Edwin Wangai and Robert Bogo. They cover different trading strategies, including Fibonacci, moving averages, ATR, trading divergences, alligator, and so on. So from that series, you should be able to find an episode that covers the Fibonacci sequence and how to trade it. So hello, Kangara Karaoke, and welcome to the session. Call Vlogs, welcome to the session. Thank you guys, thank you for joining. So let's move on to the next part of the presentation. So as already mentioned, if you're looking to trade or invest this year, the very first thing that you need to do is to set up a goal, make sure that there's a number to that goal and a date or a time frame. So if you need to invest and make 10 million this year, make sure that you write that down and also set the time frame for that. So the next thing, as I mentioned, look at your investment. So you're not going to start with $100 and build that to $1 million without reinvesting. So it's very important that you determine how much you're going to add to investment every month. It could be every week, depending on your income and the frequency of your income. So if you make income every week, then you can make reinvestments every week. If you're employed and you get paid monthly, then you can work with monthly. Let's say you are an online writer, you get paid every 2 weeks, then you might want to make your investments every 2 weeks. So it depends on your level of income and basically your personal finance outlay. So once you get this figured out and you decide that in order to achieve 5 million, let's say I need to, first of all, invest 1 million. So you must have a plan on how much to add to your investment bag every month. So once you get that covered, and of course, remember, you are writing this down. The next thing is to decide where to invest. So there's literally so many ways that you can invest your money. If you are very young in investing or you have never invested before, then there's quite a number of things that you need to get done. One is consumer loans. So if you have those Polizas, all those consumer loans, make sure that you deal with them first before you begin investing. So the other thing is that you don't invest money that you need tomorrow. So if there's some money that you need to pay your bills, to pay your rent, to pay school fees or anything of that sort, then that's not money for investing. So invest the money that you would otherwise keep somewhere, let's say in a bank. Maybe it's an emergency fund that you'd probably use in a year. That would make more sense to invest rather than the amount that you need to pay your bills in the near-term future. So once you have differentiated that, the next thing is to think about where to invest. So as I mentioned, there's so many avenues or asset classes that you can invest in, and they have different risk outlays as well as the reward outlays. So some of the key things that you need to distinguish first is that if you're a trader, you are a stock trader, forex trader, you are doing this each and every day or each and every week, then that is considered as active investing. So this means that yourself, your skill set, and your labor is being involved in the investment process. So it's active investing. So it can be compared to actually having a job. So if you are employed somewhere, maybe you could be having a second job where you are trading. So that's active investing. And for any form of active investing, the most important thing about that is to have the skill and being good at it. So if you're working as an accountant, you need to have the necessary certifications, the necessary skill, and be good at it in order for you to be working at the best of firms, in order for you to be earning the best of salaries or whatever income you get. So the same case applies to trading. So in order for you to be successful at trading, you must have the skill, the know-how in order for you to be good at it, in order for you to at least make reasonable income out of it. So it's very important that you get educated. You have to learn fast. So if you decide to become a full-time trader, invest a lot of time in trading, a lot of resources, read a lot of books, go through a lot of YouTube videos. And once you learn these, that skill will be within you forever. So the rest is about now converting the skill to cash. So if you decide to be a passive investor, and in this case, you don't want to be spending a lot of time in managing or investing in your portfolio, then in that case, you probably take longer term trades. You look for longer term value plays where you buy an asset and hold it for a long time, looking to make a reward out of it after a period of time. So in that case, you might want to consider several asset classes. One of them could be what we call ETFs. So ETFs are basically exchange traded funds. They basically combine several stocks into one basket, and when you buy that one share, you are betting that that basket will perform well over a long period of time. So some of the most popular ETFs include the S&P 500 ETF, the Dow Jones ETF, and so on. So there's quite a number of ETFs available for trading in the markets, and you can decide to build a position in that. Let's say you want to invest, let's say, 10 million cash shillings in this ETF over the next 5 years, and then get the rewards when the ETF gains in value. And of course, when the companies pay dividends, you also get a share of those dividends in your portfolio. So that's one way to do it. The other one is active management, where you identify some well-performing stocks in the market, then you build positions in those stocks. So building a position is pretty easy. Just determine how much to buy of each particular stock, and then you do this consistently. So you might not have, let's say, Tesla shares today, and then let's say you want to build a position worth $10,000 of Tesla shares. So the way you do this, if you don't have the cash outright, is to buy a small amount. So you can decide to buy, let's say, $500 worth of Tesla shares this month, and then you commit to that plan and keep buying $500 every month for the next 1 year. And perhaps by the end of the year, you will have reached that target, and then you build the next position, and so on and so on. So you need to identify the asset classes that best fit your investing style. So for instance, if you're a longer-term investor, it doesn't make sense to be participating in currencies. However, if you're a full-time trader, then you enjoy volatility. So you want to be up to date with what's happening in the markets, what are the central banks governors saying around the world. You know that when it comes to volatility, gold is king. So you might want to know what moves gold, what key levels to look in gold prices. You might also want to look at oil prices and what influences oil prices, how technical positions tend to play out, how to find good and bad entries in the market, avoid the bad entries, go for good entries. At the same time, you might want to study some price patterns, how price moves in different waves, consolidations, impulse phases. And once you understand all that, and this is something we have already covered in the Novice to Pro series, then you basically convert that skill into money by having a trading plan. And with that trading plan, you basically execute that over a period of time and get to make rewards for yourself from the markets. So if you have any questions or comments, feel free to type them in the right comment section, and I'll be responding to those questions right away. So if you have any question regarding this, developing an investment plan, how you go about it, any questions surrounding that, feel free, just type this in the live comment section. I'll be responding to that right away. So good question from Marish. Hi, how many trades should one take in a single day? So when it comes to trades, I tend to identify that you can do as many trades as you want, and you can also limit the number of trades that you want to execute every day. So what really matters is not the number of trades, but the size of the trades. So the size of the trade is what actually determines the risk that you're taking. So for instance, you could be having an account, let's say with $10,000, and then you execute a trade of, let's say 0.1 on Euro USD. So you could do this 10 times. In that case, you have traded an accumulated lot size of 1. But then another trader would be having just one trade, but they're trading one full lot. So which basically means that there's no difference between the volume that the two traders have taken. One has taken one trade with a lot size of 1, another one has taken 10 trades with a lot size of 0.1. So what you should really focus on is the volume that you are trading, because it has a direct impact on the risk that you're taking in the markets. So if you focus more on the volume that you're trading rather than the number of trades, then you might be able to manage how much risk you're exposing yourself to in the markets. So a better and even better way is to look at the amount in dollars that you're risking per trade. So if you decide to risk not more than 5% of your account in each and every day, let's say the very first trade you risk 1%, then the second you risk 2%, then you know that the only risk you can take for that trade is limited to 2% of your account. So even if it's a winning trade and you risk 1%, and then you risk 2% in the next trade, then you know that the outlay for your day on that day, if your limit is 5%, is only 2 extra percent. So you can decide to do 2 trades that are risking 1% each, or 1 trade that is risking 2%. So that's one of the ways to approach this and determine how much you want to risk in a particular day. You can also set limits for the week, and this is a step in the right direction in protecting your capital and making sure that you don't make excessive losses within a short period of time. And also a large number of longer amount of period. In that case, you don't overexpose yourself to short-term events. So thank you for the question, Marish. Hi, what's your take on trading bots? If you have a very good trading strategy and you've been testing it out, you've been trading it for quite a period of time, or tested it, and you feel it's very awesome and it's trading well, then you can always automate that into a trading bot. So things are very simple. You can even automate using ChatGPT. So you can just go to ChatGPT and then describe your trading strategy, then generate a trading bot based on that. If you can't do that, then you can hire someone, a professional who knows how to code and backtest trading strategies, and then work with that. So yes, trading bots are good, but you must know what you are doing. So don't blindly jump into a bot. Don't buy bots that you have no idea who is selling and how long they have developed, or the strategy behind the bot. So make sure that you at least know your trading, know the trading rules, your technical, your analysis, your indicators before you even think about a bot. So both are good for the pros, not good for the novices. So if you're very new to trading, then you have no business focusing on the bot. First of all, focus on the skill, understand what you're doing before you even think of a bot. So can I invest in a company to sell at any time, like we trade currencies, going long, short, then selling when I wish to? Definitely, definitely. This is a very good question, and it's so easy to implement. So for instance, we have one stock here. This is Adobe. It's going down. Let's find another one. There's one that was doing well, the Chinese company, Alibaba. So Alibaba has been on a bear market since mid-2021. If you look at the daily chart, this particular company has been going down since the Chinese government started cracking on this company. So if you look at this point and then you measure the lowest price, so the stock was down 82%. And now you can see it's making a very strong case for recovery. So in the last 2 days, that is since the beginning of the year, it has jumped by about 18.49%. So you're not limited to trading currencies only. You can also trade shares and many other assets available on the platform. So trading is simple. You just go to new order, and then you identify the number of shares that you want to trade. So let's say you want to trade 10 shares of Alibaba, then you basically click buy by market, and that's it. And now if the 10 shares gain by $100, then you get $100 per share, and that's it. So it's pretty simple to trade shares, very similar to currencies. Make sure that you practice this on a demo account before you move and trade this on your live account. So the demo account will give you an overview of how it plays out and how much to expect. When price moves by a particular number in the market, you'll know how much to expect and how much you are risking. So sorry for that. So good question from Bruce Osano. How do you develop an edge in trading, especially for those of us trading commodities? How do you merge technical and fundamental analysis to develop a good trading plan? So these are very solid and awesome questions. So when it comes to fundamental analysis, we know that these are short-term fundamentals and longer-term fundamentals. So people might be reacting to short-term news that are on the economic calendar today. And on the other hand, there's the longer-term fundamentals, such as, let's say, the policy from the OPEC plus countries. It could be something such as a monetary policy from a particular central bank and so on. So when it comes to fundamentals, they basically give us an overall direction that the currency is taking. And these basically events out the odds, or basically creates the necessary direction in the market. So, for instance, if you know that the Fed is raising interest rates, then you expect the dollar to be strengthening. So, in that case, for instance, if you look at the dollar index today, actually for the last 3 days, you'll notice that the dollar is very strong. So you can see the big spike on Tuesday, Wednesday struggled, then today, Thursday has been going up, basically indicating that the dollar is quite strong on the wake of the new year. So the main reason this is happening, especially after the Fed meeting minutes, is that the US is looking to keep hiking interest rates in order to push inflation down towards the 2% target. So knowing these and pairing these with another economy that is not doing the same will basically make sure that you have a winning edge, or there's a higher chance of winning a trade if you are buying the dollar compared to another person who is selling the dollar. So that's one of the ways to identify an edge in fundamental analysis. However, when it comes to technical analysis, the edge is based on historical price patterns. So combining these information, now that I have a bullish bias on, let's say, the dollar, then I might be looking for a technical pattern in, let's say, Euro USD. So in Euro USD, I would be expecting that the dollar is will strengthen against the euro. So I'll be looking for a short selling position. However, I don't just make any entry. I must have a trading strategy that determines my entry point. So let's say in this particular chart, I tend to trade, let's say, support and resistance levels. And I realized that this market has been going this way. So let's say this was the trend. So I just want to just do a rough overview. So let's say this is a trend. The market is using that as the resistance or the ceiling, and the floor has been somewhere around here. So the market makes a very sharp drop to support, breaks briefly, moves back up, and then makes a very strong and convincing candlestick, indicating that there's a break towards the lower side. So this red candlestick basically tells me that now is the opportunity to buy the dollar against the euro. So when this happens on the 4-hour chart, then I decide to take a risk with a target to the base of the pattern. So the base of the pattern is all the way down here, 1.02294. My risk is very small. I don't want to risk a lot of money in such a position. So in this case, I want to risk within the basis of the pattern. So if the market goes back into the channel, I'm out. But if it keeps going down, then I'm benefiting from this. So I set my take profit all the way down here, and then I go for a stop loss just here. So on one side, you have combined both technical and fundamental analysis. So I know fundamentally that a very hawkish Fed is bound to strengthen the dollar. And at the same time, I can see a technical pattern here where we had a channel was broken, retested, and now it seems like this is the momentum stage. So another key thing to consider is that when the channel was moving up, you are expecting the market to form higher highs, as you can see, and also higher lows. However, in the most recent swing here, the market did not manage to make a higher high. So this high is not higher than the previous high, indicating the weakness in the trend. So eventually we were expecting a drop. However, we did not capture the first entry, market retested, and now maybe we capture the second entry. So you decide to risk, let's say, $100 going to make $300 or $400 on the position. So that's one of the ways of combining the two, come up with a trading idea. In that case, you have a trading edge. So thank you, Bruce Osano, for your question. It's very much appreciated. So as you know, there's another question here, which basically may lead us to the next part of the presentation. And the last part is very important. It's about having a trading community. So as much as we have an investment plan, we know that community is always handful, can bring a lot of benefits to you as a trader, especially when you get to share your trading ideas with other people. They will question your trading ideas if they are not founded. If it's hopium, if you are trading basing your decisions on hope, they will tell you traders are very direct and emotionless. So if you're trading based on greed, hopium, they will tell you and they will help you keep the right mental framework. So sometimes you get greedy. You're just trading at the back of your desk at home. You execute a trade in Euro USD. Another one, you have a sequence of 5 trades. Then on the 6th one, you feel like now you've mastered the markets. You decide to do, let's say, 10 times the risk that you normally take. In that case, you get wiped out and you lose everything you had made over the last 5 or 6 trades. Sometimes you lose a week's work in one trade, sometimes a month's work in one trade. And this is mainly as a result of a slight movement outside your disciplinary lane. So the fact that once you get a trading community, you're able to consult with other people, see what they are thinking in the markets, then it makes sense to have a trading community where you get to share your trading ideas, borrow trading ideas, analyze concepts, strategies, and so on. So it's very important that you have a trading community, share with them. You don't have to use one, you can join several communities, share, understand their challenges, what they are facing, how they solve common problems. And once you understand these, then it becomes easy to trade and progress for a long period of time. At the same time, you should know that trading can be quite boring, and sometimes you're just secluded in an office. Sometimes you can't even tell your family what you do for a living. So it's important that you get to connect with other traders, people that you share the same interests. So even when you're sharing content, it becomes easier. So some of the best platforms for building a trading community or sharing content about what's happening in the markets include Twitter as well as Telegram. So I have a Telegram group. You can join my personal, not the company, but personal trading community, see what we share and how we normally approach trading. So perhaps you get to meet other traders, get to share content with them, learn from them, or perhaps teach someone something. So it's very important that you get to understand all of these. So another disclaimer, you should know that trading communities can sometimes be full of bad players. So they are consistently targeted by people who are looking to steal from you, people who are looking to scam you. So you have to be very careful and keep your guard up. So how do you enter a confirmation entry? Sometimes when the position is right, you don't need confirmation. I know when you are a beginner and you're waiting for the right kind of opportunity. For instance, in this particular example here, after this candlestick, there's no need for confirmation. The candlestick is long enough, it's convincing enough, telling you that there's a very strong entry by sellers. So there's no need to wait for confirmation. Just like your short selling position, set your stop loss, take profit, and then set a time frame on which to keep managing your trade. So you might want to, let's say, check on the trade after every 4 hours. So you come back 4 hours later and see how the price has performed. Make a decision whether to exit the trade, adjust your stop loss from this point, let's say, to your entry point, or let the trade keep going. So you need to set a time frame upon which to keep managing your trade. So I hope that answers your question, Frederick. So in between, for instance, let's say you're looking to achieve, let's say you're looking to achieve an investment of, let's say, 1 million shillings in your trading account, and you just started today with, let's say, 50K, next month you do 50K, you need to at least set some milestones. So you need to celebrate your milestones. So if you, let's say, are looking to achieve 1 million shillings, you might have a milestone of 500K and 750K. So when once you get to 500K, find a way to reward yourself. Maybe decide that once I get to, let's say 500K, I'm taking 1 month break or something of that sort. Or I'm taking myself out, buying myself something. Just make sure that you reward yourself once you hit your milestones. So you can have some milestones in between. So the journey can be long and tough. Sometimes you're going to get some good months, bad months. Sometimes it's easy to contribute to your investment. Sometimes it's really tough because there's other factors competing for your income. So when you hit some good milestones, it's good to reward yourself. So find a way of rewarding yourself every time you hit a good milestone. So if you've been investing, let's say 50K per month, and you do this for, let's say, 10 straight months, that's 500K, that's a good round number. So you might think to yourself, I've done this for 10 months, maybe I should take a good trip, get to reward myself with this or something that you really like. You could go to a movie or whatever that is. So whatever makes you happy, just go and do it. Reward yourself for doing that and honoring that commitment to your trade investment plan, and then come back stronger and commit to the same plan. Keep going until you get to your target. So it's very important that you understand that concept and you try it out. So if there's no other question, I'd like to thank everyone. Thank you for your time. Thank you for participating in this session. I always appreciate you and your participation here. Also, taking your time on a Thursday evening to listen in to this particular session. I know there's other people who will be listening after the recording. Welcome to the session. We will keep going with this series up to the end of the month. And once we complete January, then perhaps we'll create a complete new series based on your feedback to provide even more value in your trading and help you grow and make money out of the markets. So thank you very much, guys. See you on the next session.